Good morning, traders. It's Tuesday, 21st of October 2017. This is Berlin speaking. My name is Jens. I'm just the introducer. I will speak the first 1 or 2 minutes before the day trader of the day. Today it's Paul Wallace day. Will speak about the markets. Real-time daily trading ideas, 5 days a week, 5 different traders, 5 different styles. Yesterday it was premiere of Jay Medvo. Many people and many fans who liked him. If you like to see him also, just visit our YouTube channel and you will find the recorded video. But for today, it's Paul's day, and let's start with the introduction, of course, with a risk disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. Before you are starting with live trading, please start with a demo account and make you familiar with all the trading, the risk management, and all the other options what you can see by trading Forex and CFDs. If you like to see and read the full risk disclaimer, just visit one of our web pages like admiralmarketsglobal.com or also admiralmarkets.com and you will read anything about it. This is me, my English made in Germany, so maybe not perfect, but hopefully some of my quality is made in Germany too. But again, I'm not the main speaker. The main speaker will following in a couple of seconds. This is our scheme. Monday, it's Jay's day. Tuesday, it's Paul's day. Wednesday, it's Mike's day. Thursday, it's Nenad's day. And Friday, it's Dirk's day. Today's actions are tomorrow results. We will try to make it short, 15 to 20 minutes, and show a trading idea of the day every day. And of course, if you like to ask some questions, do it by typing, and we will try to answer 1 or 2 questions of all the participants in any webinar. And of course, if you like to trade Forex and CFDs. Here you see some benefits what you only get with Admiral Markets. For example, we have one of the best offers for DAX 30 for index trading with CFDs, typically fixed spread of 0.8 points only to main trading hours. We offer mini contracts, mini lots, and of course, negative balance protection policy and many more advantages. Find it out at admiralmarkets.com if you like to read more about it. Of course, our regulation is also great, UK FCA. And if you'd like to contact us by phone, by email, or our YouTube channel, what I mentioned a couple of seconds before, everything is to find here, of course. And now it's time to speak by Paul. This is Paul Wallace. Here you see a picture, and now you will also hear his voice. Hey, good morning, Paul. It's your time now.
Good morning, Jens. Thank you for that introduction. I hope you can all hear me, ladies and gentlemen, and I hope that you can actually see my screen at the moment. If you can, everything you can hear, fantastic, fantastic. That's a good start. That's a good start. So, welcome to everybody, wherever you may be in the world. Thank you for joining us this Tuesday morning. So we've had an interesting morning on the euro already, so I'm going to talk through a few ideas for you to take away. One of them being let's say like a swing trade idea, and then maybe 1 or 2 ideas to have a look that can set up either as we speak now or as the trades play on for today. As always, it's important to recognise that you know, the markets are dynamic; they constantly change, and it's important for all traders to understand and know what is the big news coming down the line, because that can have an impact upon the market volatility. In particular, what we have with regards to the euro this week is that, you know, on Thursday, you know, we have ECB Thursday, and then also we're expecting some GDP numbers out from the US on Friday. The rumours are, and I do reiterate, they are merely rumours, is that, you know, the ECB may look to sort of taper on their asset purchase, and that'll have an impact upon the euro, and then sort of GDP results from the US may also have the same for the US dollar, and not surprisingly, that will have a knock-on effect to euro US dollar. What we also have, ladies and gentlemen, is, you know, Trump made a few comments yesterday that he's getting very close to identifying who he wants as his particular next head of the Federal Reserve, and you know, that will have an impact because of the way they are, the way those particular individuals are seen. So it's a case of at the moment, Mr. Powell is the bit of a favourite, and he's a hawk, and that will have an impact upon markets. Janet Yellen is still in the running, but yeah, personally, I think she's waiting for a taxi, and that'll be her out of the door in February. But things change, times change, okay? But it's important to have an understanding of those big picture views and what they can have an impact upon our trading. So let's have a little look at some of these charts then, and let's see what I'm talking about. So, excuse me. Here's first trade idea is on the euro dollar. We've had a bit of a move this morning on euro. There's been a lot of good news out for across the eurozone, and we also had some news, sort of over the night, which has propelled the euro across. And we're going to have a little look at that in a moment. But first of all, let's talk about a little trade idea I kind of set up recently that what I'm looking at, and you can take away and see if this works for you. As always, these are just simple trade ideas. This is a demo account. What we're here to do is to give you an idea of what's possible, in terms of A, the markets, and B, with what's the fantastic tools that the Admiral Markets MetaTrader 4 and 5 Supreme Editions offer to clients. So hopefully you can all see my chart. What I've got there is a euro dollar 4-hour chart. Here we go. And now I talked last week about a little bit of a sort of a head and shoulders pattern starting to appear here on the euro dollar, and how I was looking for retests of the neckline, and we've had that. But as we go down, what I want to look at is the 4-hour chart. This is a swing idea that you can have a look at and think about to begin with. And excuse me, what you might be able to see is that we've got this very simple green 200 period moving average, a red 50 and a blue 20. That's what I have on my chart, along with some horizontal lines of support and resistance, just using very, very simple technical analysis just to give me an idea of trade opportunities. Hopefully what you can see is that the 200 period 4-hour moving average has acted as some very nice dynamic resistance. Why do I call it dynamic resistance? Well, because it's a moving average, it's constantly updating, it's constantly changing. And I've been noticing that as acting as dynamic resistance. But here, I was short last week, but what we actually saw was we ran into a very nice double bottom here, okay? Double bottom around about the 1750 area. That's what we saw there. Excuse me. And that double bottom also ended with a kind of a very nice sort of a big bullish sort of almost engulfing candle, but a very strong end to that downtrend, and price popped north up to that 200 period moving average. We can see that price got down here again at the start of this week, and so I'm kind of interested to see that clearly that sort of 1750 to 1700 is a level of support. Okay, we could debate all day why and how. There's lots of reasons for it, but you can see what the market is telling us, that is every time the price gets down there, it doesn't hang around there long. It kind of has a pop to the north side. So what I'm looking to do is I'm looking to have a trade to buy at a sort of the 1750 level, with a stop just beneath those recent lows down around about 1720. And I'm looking to target back up towards that sort of 4-hour 200 period moving average. What I actually think is going to happen is, and this sort of explains why I was talking about what's going on later in the week, is I actually think that what we'll have is the euro dollar will coil up for the rest of the week. What will happen is it will just coil up as players get ready and sort of sit on the sidelines waiting for the big boys to come out and make their announcements on Thursday and Friday. So I'm expecting that markets in this particular euro dollar will probably stay within this range that it is, and that actually what it will look like is it will look like a triangle forming. It will look like a price coiling up. It's there. It's just slowly but surely coiling up before we get some new major information into the market, and that is what will create the momentum for the next move, whether that be to the north side or to the south side. So in particular, that's a little swing opportunity to look at for yourselves there. Okay, looking around at that kind of 4-hour bottom of that sort of range there, targeting the top of the range, stop beneath the kind of the lows there. So that's one particular idea for you that you can take away. What I was also looking at is, and some of you may have seen it already today, is that here we go. Here's a chart of the euro Aussie. And as I said, we can see we've already had some fantastic moves there on, that we've had real euro strength and Aussie weakness there. And of course, that's, just powered its way north there. And what I was hoping to see is to see some sort of particular price action around here that gave us an opportunity to either get on board to join the trend, or to wait to see if it was to roll over. But as you can see, at this particular moment, this is only going one. This is only going one way today. This is, it's not really worth. What I suggest to traders is, don't try and fight markets when they're like this. Don't try and, when a market is on a tear like that, trying to fight it, trying to sort of trend against it is normally a bit of a foolish way to trade. And it's a case of, what you're looking for is an opportunity to sort of get on board and to ride with that, to take that, as it pulls back. And as you can see today, it's been a very, very small, very limited pullback indeed. So, I've been watching EURUSD, but the reality is that, that train left the station. It is powered off, all right, and so we need to go and look elsewhere. In particular, what I've also been watching here is the euro against the yen. This is a 1 hour chart that we can look at. So, what's the sort of feeling behind this? What's the moving behind this? Well, here we have if I just zoom in a little bit. Here we have is a gap from Sunday evening. Why was that gap created? Well, for those of you who may have been watching the news, what we saw was Shinzo Abe won another term as Prime Minister of Japan, and that basically means there was a backing for his Abenomics monetary and fiscal policy, and it means that the head of the Bank of Japan, Kuroda, they will all keep their jobs. And what we saw as when the markets opened on Sunday night was a nice particular gap. Markets gapped up, and then the way I like to explain that is that nature abhors a vacuum. Okay, think about that. Nature abhors a vacuum, and so whenever there is like a vacuum here, like a gap, it acts like a vacuum, and invariably what happens is price gets pulled down towards to fill that gap, and we can see that's what happened. And it's not a surprise that we saw a little bit of a move back, a reaction after the political results of in Japan. But we fell away to overnight lows, and this morning once again you can see we've just flown up here. Okay, we've just absolutely flown up. And what it was looking at here, around this area here, okay, around 133.70 to 75. What we had was, what was just forming was we had a pin bar there, okay. So what I'm looking at there on the 30-minute charts, we had a pin bar there. We've had a little bit of an inside bar push, and we're now getting a little bit of a double top there. So what I'm looking for is an opportunity to scalp back into the sort of support zone around about 133.40, 133.50. And so what I'd be looking to do is to basically to place a very quick, simple trade upon that to effectively take advantage of a possibility of a sort of kind of a snapback, a reaction against the move so far. So let's just look at putting on a quick trade on there. Now, normally what we could do is if I was trading very quickly on a scalping, I'd look to use the mini terminal here that you can have to use and to joy with your trades. But that's ideal excellent for scalping. But I'm looking to set a pending order today, a pending order. Now today I'll talk about how we can do it just on a normal or original, but next week I'll do is also I'll cover about how we can use some of the new Supreme tools to make it even better. So today we show you how you can do it, but then actually next week we'll show you how the Supreme, some of the tools in that Supreme are fantastic at enabling that. So I'm basically looking to be to short there, okay, at 133.59. There we go. Trading. Let's have a new order. Pending order 133.59. As I said, this is just for our trade ideas, okay, for the day. We can just show what we can particularly look at. And there we go. Just let's go down there. Okay, taking a little bit of time as always. And this is why this is one of the weaknesses of the original MetaTrader is having this. And what we'll show you in future is the new fantastic order ladder, which is a superb piece of kit, and that is actually a much better way to operate going forward. So what I have there is just a very simple order in there. As always, I'm always looking to have my stop loss in place, and I'm going to have my stop loss above one of the recent highs there. So if I just can place in there, my stop loss, we can go at My stop loss will go in at 79, and my take profit is going to be at 49. So just a quick scalp of a trade there. We can just have that. There's no expiry date for it. That should work. There we go. Super. There we go. Let's go modify that order. Let's get into that. And it should let me just modify that quite easily, he says. I think what's happening there is because the prices I'm ahead of myself, and prices starting to move down a good bit here. So let's just wait, because I think what's happening is that yeah, price is getting close to its trigger price, and we'll do that. But what we're looking for is, we're looking to trigger an order there at 159 down towards this region of about 48 to 49 into here. I think this area here will act as an element of support, and we'll have our stop loss at around about 77 to 79. We can have an idea at looking there and watching that. Hopefully this will play out as a double top there, not very nicely, roll over and fall away. Whilst you're also looking at trades, what you could also have a look at is the, here we go, the euro Kiwi dollar. Once again, you can see there's just been that absolute huge move up there, right, that we've seen. And it finished there with a very nice sort of key reversal bar there. That's on the 15-minute chart. So what we'll be looking at is here you can see on the 4-hour chart, now it looks like a particular sort of false breakout that we've seen there. We've got a nice shooting star at a level that was a resistance, and price has fallen away from there. So what we'll be looking at doing is being able to sort of take a trade, a short trade there from the area once again back down towards the sort of this level of congestion here that we've seen here. Okay, you should always keep an eye on what the sort of the 20-year period moving average is doing, especially on the daily chart. There's a lot of buy and sell programs that look to maneuver around that. So we'll be looking at there at it's just taking a short trade there from about 69.40 down to around about 68.50. So there's a nice opportunity there, a nice move that you could sit and watch. So I'll just finish off with see if there's any questions there. I'd say
yeah.
Hopefully we'll take any questions.
Sometimes running a TV show or even just a webinar, you don't see sometimes what is the issue. So you could modify your order because you have mixed your take profit and stop loss. So sometimes it is like that, and sometimes you don't see it. That's why I'm switching back to my screen, and I give you a tip. There's always more ways to go in your direction, what you like to do. You can do it with this order window, but an order window is really 1990s or 1980s. It's outdated, it's old school. Why not to use just mini terminal? I just make a demo trade here without thinking about what to do, long or short, just to explain what I like to do if I do a trade. So just making a trade, and if you have the order line here, just go the order line, and then you can click with your mouse and move your stop loss and take profit to this direction what you like to have. And if you do it like that, you have your stop loss and take profit. And if you see it, it's a little bit smaller displayed here. If you move and you're not sure how much your take profit and stop loss should be, you will see also your risk and your profit options here a little bit displayed. So right now it would be €4.76 because it's a really, really small position. Just try it out. And of course, if you don't like it, you can move it and edit it all the time as long as you like. That is my tip for today. And thank you, Paul. That's it for now. Quick and smart, 15 to 20 minutes. We are done today, and tomorrow it's the next day from Mike, day trader of tomorrow. Thanks a lot and have a nice day, and always good trades. Bye-bye.